Hey, hello everybody. Today is Monday. Let me do like after hours video. I already updated the spreadsheet as I'm presenting right now. Let me. And as I post to you guys, we still haven't seen a huge put flow. And the put call rate, the dark pool put and call ratio for this week is really high. Market doesn't crash when we have too much hedge. As you guys see in the post, and also as I put in the market wrap, I'm very confident that the market is going higher. A lot of very good analysts, CFAs, whatever, you know, they also give me the same call because you have too much hedge. Since you have too much hedge, too much negative delta, they need to buy to neutralize their portfolio, right? They need to really buy to neutralize their portfolio. This is the market dynamic, right? Everybody expecting a crash. As you guys see in all posts, people that look for fractal, people that use Fibonacci, people that use Elliott waves, everybody's looking for a crash, right? Everybody's looking for a crash. This crash will happen. Yes, will happen some days. They need to happen, happens because we spiked more than 100% since the COVID. Okay, but nobody knows when. I don't think that market crash this year anymore. Why? Why? Because the huge put flow. I also talked to my cousin another day. It's a lot of people just looking for a crash, and then they try to guess where the top it is. They have been buying puts a lot, and consequently, the market dynamics, the suppression of the volatility have been taking out the premium from the puts, and consequently, that people that have been buying, like short puts, they get being screwed, losing a lot of money, right? And I will repeat, what I have been telling to a lot of people. If you see a black swan, and if you see a crash, maybe next year, you be a black swan, and not everybody that you be able to get the crash. That's my call, okay? If crash happens, I cannot call a crash because we have huge orders, but there's some for example, let me get this book for Monday, for example. The line 238, that's a old, that's a very old order. Consequences is already in the money, but since we drop, remember the guy bought $137 million back on July 29, and he bought when the market was traded at 4,142. These guys knew that the market you wanna drop. So if as soon the market went to 3,490, maybe these odds supposed to be closed already. I let me because they make a lot of money. You put a note like in. But I keep in the spreadsheet, okay? I keep in the spreadsheet uh, because the expiration date is 10 to in 31. But for sure, these guys already closed this order. Like 2 weeks ago when we bought at 3,490. Look how much money this guy did. Okay? So since you have a put call rate above 1, at 5, we have too much hedge. Consequently, too much hedge. What's gonna happen? Vana, Charm, Voma, D Vega, D Time, all the Greeks you work for the maker. Then you force, people to buy assets to neutralize the portfolio. And this is, what Sam Croissant is already said. And maybe we will see absorption from the market in every drop, at least up to the Fed, the Federal Reserve meeting. Okay, that's my call. For tomorrow, as you can see, also the new orders for tomorrow. Now, we also have too much premium put for the SPX and dark pool. And let me look for 3,751 as a support. Okay, that was the big order that print today for the SPX. If they wanna sink the market tomorrow, I'm looking for 3,751. But the squeezing metrics, the DIX, is already jumped to 47, and GX also jumped for $800 million. Both walking in the same direction. That's something that's not usually to happen. And this pattern is a very bullish pattern. So looks like that the market will absorb every drop. Okay? And that's it for the spreadsheet. Also for Wednesday, for the new book, look, almost like $1 million premium puts and only $650 million in calls. And the put to call ratio is already also higher. We have more premiums in put than calls. Usually in the market, always walk in the opposite directions. And then I'm looking for a very huge short squeeze or gamma squeeze. Do it, a lot of puts going on. And looks like that the makers sold those puts and retail have been buying a lot those puts, looking for a crash. Okay, remember that the market's not economy. Okay, market's not economy. Market's poor liquidity, market's poor math. Okay, market's mathematics, because you have the Greeks, and market is liquidity. If the market starts to pricing that the Fed will put liquidity back in the market's going up. Remember, the central banks have been bailing out in big companies and banks since 2008. Because that, some, assets born, such as Bitcoin. As you guys see, the Bitcoin is not following the movement. I'm not even put Bitcoin over here, but let me. So Bitcoin is not even follow the movement. Okay, the bullion band is really squeezed. The MACD is giving like a buy sign. I don't know if it go up. We have like a bullish, bearish in Gulf today. Okay, but if the Bitcoin, is poor like quantitative math used by the exchange. If they want to push, they will. Depend of the exchange. We have a lot of holders nowadays, and we don't have too much makers. So the volume is disappearing. We have doesn't too much liquidity in these assets, and the assets is sideways for how long. And the market's going up and the Bitcoin is not going up. It's because I told you guys, how to invest. We don't have any premium in crypto nowadays. We have a premium in other assets. And we will have a big premium, especially in commodities, when you see a big crash, or even, not a big crash, when you see, the inflation get stable, the money will flow to commodity. Okay? That's the easy call. So that's it. I don't have too much to say. Yeah, I'm looking for a top, especially in that region. Let me put the SPX. I'm looking for a top, starting in that region 2079. But remember that we have gamma at 4K. Okay, you have a SPX gross gamma at 4K. And usually the market, try to find where the gamma is. So that's a possibility to go to 4K. Okay, that's we have a big gamma, even that's the gamma, the real gamma, because you have a conflict between, puts and calls. It's a very mixed, and the gamma is over here. you have another, you know, spike in call option at 3,900, and the gamma flips at 3,835. We are very close for the flip. As soon as you flip the gamma, maybe we can go to 4K. That's an analysis based in gamma. So as soon the let me put, you know, the gamma. The gamma graphic over here. Not this one. No. So as soon as you see the flip at 3,895, usually by pattern, you know, the market supposed to go try to reach the gamma at 4K, the preview graph that I show you guys. Okay, that's a possibility. You guys need to have your eyes open in that region at 4K. But dark pools give me a top around 3,979. So as soon as I reach 3,979, I will start to buy hedge. You know, I will start to buy long puts from SPX puts at with strike 3,450. I have been seeing a lot of pitches for January in such level, and also for March in such level as well. And also same level in June 2023. So that's, you know, the level that I'm looking for to buy hedge, you know, and they strike that I already said, 3,475 or 3,450, sorry, 3,450. Okay, so my call, basically, you know, basing in gamma, 4K, basing in dark pool today, 3,979. I also put over here dark pool resistance. Okay, guys, take care. Enjoy the video. Be careful to short the market nowadays, because the market is already set up to absorb all the dips.